Last week, RBI gave a green signal to banks to invest in real estate investment trusts or REITs. While the exact guidelines will be issued by the end of May, just the news of the go-ahead has brought in some excitement in the market, as REITs have always been touted as the much-awaited savior of the financially stressed real estate. To discuss how REITs will impact the real estate sector, we have with us Om Ahuja. He's CEO, Residential Brigade Group, and we also have Kalyan Chakrabarti. He's Managing Director, Rising Straits Capital. Okay, so Om, let's begin with you. Now, SEBI is given the go-ahead. RBI is not should encourage the banks who want better returns. And what do you think? Is the road completely clear? Are there no roadblocks? Because if that was true, we would have seen some REITs listed by now.
Well, Anjali, at this point of time, the roadmap seems to be extremely clear. Last approval from SEBI for mutual funds to set up a PMS for real estate REITs has already happened. And we've seen quite a few fund houses have come out and raised money from HNIs to park money into REIT structures. Not too many for commercial, but for residential they've started. But in commercial, we've seen this head start happening. With the REITs as a real structure coming out, a lot of developers have set up their infrastructure ready. I think once you have institutional participation, more to do with banks and financial institutions getting ready for it, I think it's only one side we see that's upside in terms of REITs taking off. All this while we saw HNIs taking the advantage, investing directly or through a mutual fund PMS route, which they have benefited. Now we'll see more larger participation and creating more larger market for REITs in India.
Okay, so you've just talked about HNI, so I really do want to touch upon this topic. Mr. Chakrabarti, a lot of people have wanted to be part of the growth story when real estate was really booming. And the only problem is people do not always have that kind of investment, capital to put in. So what do you think? Will this give an opportunity to the individuals as well to now openly go and put their money in real estate?
I guess retail participation and the clarity around this is going to take a while. It is as of now going to follow the SEBI standard structure. So there will be an allocation for the retail where definitely retail will participate. But this particular reform or this particular development has got less to do with the retail and more to do with the banks participating, which to me is the right thing to happen and an obvious thing to happen. So exuberance in India sometimes happens even if the right thing and the things which are supposed to happen in the natural course of time also, if they happen, we still celebrate it, which is I think an interesting way of how in India we operate. But fact remains that this is an incremental credit window beyond the real estate sectoral limit that is there for real estate in the RBI scheme of things with respect to banks. So that is one critical element. So as a result, this is part of that same window in which they have the venture capital fund, the mutual fund and other things. So it's that 20% of the net owned funds of banks, which essentially is classified under capital markets as an exposure and not real estate as an exposure, and rightly so. So do I think money will come here? Absolutely yes, because on a risk adjusted basis, I do believe the returns from REIT are going to be as good if not better for a bank. And in addition to that, there is incremental liquidity because you can just sell it off and get out.
What returns are we talking about? The same kind we see globally?
No, so it is currency adjusted, right? So globally, you'd see a REIT cap rates which are linked to the local currency of the particular market. So in US, for example, in dollar cap rate could be in the range of 4 to 5%. In Japan, it could be 2 to 3%. For us, it could be anywhere between an 8 to 9. Okay. Some people predict post REIT listing, it can come down. But there is always a reference point of the 10-year GSEC. The 10-year GSEC is around 6.7%. So one would expect this to trade at a particular premium. My personal view is globally it trades at around 200 to 300 basis points premium. In India, ideally that means 9.7 to 10. I don't see trading it that way. Okay. I do see it trading around a 7.5 to 8 kind of a range.
Okay.
However, the capital appreciation which comes along with Indian assets, Indian real estate assets, given that these assets operate in an inflationary environment which itself operates at a 6 to 7% inflation, there is that additional kicker which comes through the capital appreciation. Okay. And hence I should be expecting to make a 12-13% return as a REIT investor.
That sounds like a good return. Om, I want to bring you in here because a lot of realtors have this feeling that PEs have been a very expensive source of, not only just expensive, very impatient as well, source of funding. So do you feel with REITs coming in, that problem of realtors is kind of sorted out?
Anjali, there are two sets of people who are dealing with PEs. One who are looking for growth, and the second set of people are basically looking for funding which is to survive the market. I think PEs are a separate category of asset players in the market, but what REITs are going to bring in is a long-term money in liquidate, putting a market value to your assets, which currently in current environment, most of the developers may not be able to put a market value to their assets, primarily keeping in mind the office assets, where it's very difficult to give a valuation, or maybe retail malls, or assets which are with regard to something which is in the commercial nature, but shops and many other establishments which many developers have. I think what Kalyan said, expectations of 10 to 12% may look a possibility, provided there are larger participation from the developer community. So at this point of time, we keep hearing about big names, office spaces being transacted or maybe getting ready for REIT assets. But what we will see going forward, like you have in G-Secs and you have in corporate bond market, A++, and then you have A and A-. So you will have variety of REITs being assets being offered to HNIs, banks, insurance companies. So there will be larger participation and long-term money which will be accessible by developer community.
That should be a good news for the real estate market. But Mr. Chakrabarti, what do you think? By when should it turn into reality? When will we actually see a REIT getting listed? Because we've been talking about it for so long.
What breaks my heart is Pakistan listed about a year ago its first REIT, and sitting in this studio, I said it about a month after that I was in the studio. So other than that, it is very difficult to kind of predict. I cannot really do crystal ball gazing, but I am expecting sometime later this year we should start seeing good amount of traction from one or two players, because the critical size, asset size is there with now 2-3 different players. So now who have reached a 20 million, 30 million kind of a size. So size is not a factor.
Yes.
Tax, I think as much of liberalization or as much of friendliness as it could be induced has been done. There is very little, in my opinion, which can be done more than this. Stamp duty is a difficult one. So I think if people have to take their leap, it's time. I don't expect significant or substantial changes on a positive direction happening anytime sooner. So I do expect, the optimist in me and the Indian in me says 12 months.
So basically your perception says the time is right. But Om, what do you think? Mr. Chakrabarti here says the time is right, it should happen now, because there is no other reason for it to not happen. You are part of the community. What is your sense?
See, the whole plan was, government was very clear about the introducing REITs in India. They did the tax clarifications. After one more budget, they did further tax clarifications. I think it's now putting the horse before the cart. With the insurance companies and banks being allowed to invest into REIT market, which should be very clear by end of May, I think there will be no reason why REITs can't be a possibility. All this while, people are looking for big boys to come and play the ball. But I think there were a lot of small boys who are waiting to play the ball now.
Okay, I think Mr. Chakrabarti has...
So I just wanted to add to the previous point made. Essentially, let's not forget that almost $30 trillion of global bond money is yielding negative yield now. You know, sub-zero kind of a yield. All these pension funds, insurance companies who have an yield expectation, regular money coming back to them, yes, and long-term players who can hold an asset for 30-40 years are looking for avenues of real interest coming their way or real yield coming their way.
Yes.
Even if it yields like a 7% or 8% kind of a regular rupee yield, adjust for FX, you are still earning 2% of yield in your hand in dollars. That's extremely positive. So whoever jumps in my opinion, will get a good pricing as well and good interest from the global investors.
So basically it's a win-win situation for all people who put in money, realtors who get the money. So it sounds like a good plan. Now we just have to see it becoming a reality. Anyway, both of you joined us. Thank you very much for that.
Thank you.